Rita Crunwell was successful in stealing over $53 million from a city that only had 16,000 people, the city of Dixon, Illinois. You might be thinking, how can one person steal that much money from such a small entity? Well, she did so because the city had weak internal controls, and then she was able to steal for about 20 years. So as you perform your audits, you want to think about how strong are the internal controls, and is theft going on? Is there the possibility that management is manipulating the numbers? We're going to see both of those potentials in this video. So let's go over to chapter 9. Okay, guys, any fraud here? So here we are in chapter 9, and as I begin, I'm thinking about frauds that I have seen in my career, and there have been many. One of the hard parts of planning or looking for fraud is there's thousands of ways that this can occur, and there's no way you have the time to look at every one of those potentials. So you need a framework, you need a method to help you hone in where fraud is most likely. As we begin this presentation, I just want to ask the question, what is fraud? And you may be thinking that's a pretty basic question, and I'll say, yes, it is. So why do I ask this question that's so basic? Because I find that most auditors think of fraud in terms of theft alone, and we need to be thinking about not only the theft of assets such as cash, but we also need to be thinking about the manipulation of the records. So fraud really has two potential areas: theft of assets and manipulation of financials. The definition that I provide in my book is this one, which says it's an intentional act. They mean to do it. It wasn't an accident. Usually with deception, they're hiding what they're doing. Almost always they're hiding what they're doing by one or more persons to alter the financial reporting. That's one way fraud happens. Or steal assets. That's the second way. Let's look at cooking the books or manipulating the numbers. Companies can do this by playing with the estimates. We saw this in the last video, management override of internal controls. They can do other things such as understating their payables, or they might book false journal entries. So any method to inflate earnings or overstate assets or understate liabilities or understate expenses, if management's doing any of these things and they're doing that intentionally, I go back to my definition. If they're intentionally doing this and they're hiding the fact that they're playing with the estimates or understating payables or booking false journal entries or anything to make the numbers look better than they really are, then fraud is occurring. Let me give you one warning as we talk about the issue of fraud, and this is really important. Probably the most important thing I will say in this video is never say that management is committing fraud. That word is very inflammatory and can get you sued. So you always want to deal in facts. So if you determine somebody's stolen $100,000, you present the evidence that there's $100,000 missing. You don't say, hey, there's fraud here. You just present the evidence that the money is missing. If you stay away from that word with management or those in the company, it'll protect you. So always stick to the facts and try to stay away from the word fraud as you're doing your audit. Now, We said there's a second way that fraud occurs, and that's through theft. There's hundreds, thousands of ways that theft can occur. Here's some examples. Kickbacks, where management or those with the power to purchase, they're getting money from a vendor, for example, as they decide to do business with that particular company. Sometimes there's fictitious vendors. Payments are being made to parties that don't exist. Sometimes there's skimming. For example, the cash receipts clerks might be stealing checks as those are coming into the company and then decreasing the receivable amount for those customers. So they're playing with the numbers, stealing the checks, and then converting those checks to cash later on. Again, there are hundreds, thousands of ways that theft can occur within a company. We should be performing inquiries of key personnel about the potential for fraud. And some of the questions that you might ask are these that you see on the screen. If someone wants to steal, how might they do it? Now, some of these questions you may be thinking, why would you ask that question? Too many auditors ask, has there been any theft during the year? And when they hear no, they stop. We should be asking broader questions. We're looking for ways that fraud might occur. This first question, if someone wants to steal, how might they do so? It gives you a broader context for seeing the potential internal control weaknesses in the company. Second question, are you aware of or do you suspect any fraud? If yes, please describe. Third question, are there any allegations or suspicions of fraud? If yes, please describe. And then fourth, does the company have any related party transactions? If yes, please describe. So when you do your fraud interviews, ask these questions. There are others that you could also ask, but I would ask these and then document those answers in your work papers. You might be wondering, well, who should I interview when I perform my fraud inquiries? Glad you asked. So I've got a list here of potential people as examples for people that you would interview in your fraud inquiries. 1, a receipting clerk. 2, the billing supervisor. 3, the CFO, the CEO, and then finally a board member. Those last 3, if they exist in the company you're auditing, I would always talk to them. The first 2, they're just examples of other types of people that you might interview. The people you interview, it's really dependent upon the dynamics of the company. So I'll leave that to you. I'm just saying here, the last 3, I would always talk to if possible. That last one, you must interview somebody with those charged with governance. That would be a board member or an owner, and that's required in every audit. Now, once you perform your fraud procedures, then you're going to meet with your team and you're going to brainstorm about how fraud might occur. I would do this brainstorming session toward the end of the risk assessment process. After the preliminary analytics are done, after you've done your walkthroughs, after you've done your retrospective reviews, after you've done your fraud inquiries, then I would meet with the team and I'd throw the question out, how could fraud occur in this entity? As you have this session with your audit team, I would encourage you to have a whiteboard so you could write down the different answers. And you want to invite everybody on the team to participate in this discussion. Now, you don't want to overkill this. There's no need to spend 2 or 3 or 4 hours doing a brainstorming session in most audits. Most of the time you can do this in, say, 30, 40 minutes, but have a whiteboard, ask the team where might fraud occur, and jot down each idea. Do not eliminate any idea as it's presented. Get every idea on the board. We're brainstorming, so we want as many ideas as we can come up with, legitimate ideas. Note that the partner has to be present in this interview and that the key team members should also be present. So the in charge and the partner, really, they have to be present. And then you want to look at other audit team members to see if they should also be present. Once you do the brainstorming session, when you come up with ideas for how fraud might occur, then you want to bring those onto your risk assessment summary form. We keep seeing the same slide in every presentation, but it's the step that should occur after you do that part of the risk assessment. We're bringing together all the potential threats into one place on this risk assessment summary form. Okay, let's summarize this chapter. We said that fraud can occur by the manipulation of the numbers, and then it can also occur by the theft of assets. In every audit, we should be performing fraud interviews, and we want to talk to the key people in the company, such as the chief executive officer, the chief financial officer, and certainly a board member or an owner, say in a smaller company. In next week's video, we're going to take a look at preliminary analytics, and this is really one of the more important pieces of risk assessment. So I hope you'll stay with me as we continue our book, Audit Risk Assessment Made Easy. Until then, take care and bye now.